Hello, everybody. Today is August the 6th, 2024. And this is Trading Market Cycles. And I am Dr. Richard Smith, Executive Chairman of the Foundation for the Study of Cycles. Good to be with you again. And just a quick reminder that the Foundation is a not-for-profit. And if you're not a member yet, we sure would love to have you become a member. And if you're inspired by our work, to even make a donation. So great to be with you. It's been a wild couple of weeks since we last been together. I did an interesting interview last week that hopefully will be shared with you. That's why I wasn't able to make it at our usual appointed time this week. But in the interim, the markets have given us plenty to chew on. And today, we're going to be talking about the yen deleveraging. So what's going on with the Japanese yen? What's all this noise about the carry trade? What can we learn from cycles about the carry trade and what its implications are for short term and a little longer term in the markets, and whether or not there is a trading opportunity? So, this pertains to what's going on in the markets in general, right? We've had a lot of volatility starting Sunday night into Monday morning of this week. We had some really great volatility, great or not so great, depending on your perspective. But that's really why we're focused on this week's theme. So, Dan, thanks for the note. Greetings to you. Good to see folks from Germany. Germany has a soft spot for me because I was actually born in Germany. My dad was in the Air Force over there. So good to always have our German friends. So thanks for the note, Dan. And if you others want to share with me where you're coming from today, it's always good to feel you a little bit, know that you're there, and know who I'm talking to. So I want to start today. I'm going to get into the cycles, and I think there are some interesting cycles to look at. But I want to start with really going a little deeper into what this carry trade is. What is a carry trade? Why is it creating uncertainty in the markets? Is that the only thing that's creating the uncertainty in the markets right now? I don't think so. But I think it's important thing to understand, not just because the media is talking about it and it's important to know what words mean, right? And what's going on in our economy. But in preparing for this, I've had to better understand it myself. And I think I'm relatively market literate. I'm not a PhD economist, but I had to work to understand it a little bit myself. So gonna start by sharing with you kind of what is a carry trade, what's going on, and why is the yen carry trade the talk of the town today. And I'm going to start with a little conversation I had with ChatGPT. So I thought you all might find it interesting how I use ChatGPT to help me better understand things. And so we're going to start there, cover a little bit of economic ideas, and then get into the cycles, where we're at, and what the trading opportunities are. All right, so let me adjust my screens a little bit here. And I'm going to share my screen. And I think we're starting here. All right. So this is a conversation that I had with ChatGPT. And this is the conclusion that I eventually arrived at with ChatGPT to explain what is a carry trade, how do they develop, and what's going on with the currencies and the interest rates in order to create these opportunities that people financial types pile into. So the most stark carry trade going on right now is between Japan and Mexico. So Japan is in a situation where it has lots of old people, a slow economy, low interest rates, and a cheap currency. Okay, so Japan is a older economy. It's got lots of old people, right? It's not in growth mode. It's a slow economy. And so the Bank of Japan has to keep interest rates very low to stimulate the economy. And therefore, it has a very cheap currency. So Japan has had interest rates around 0% and negative, below 0% for a long time now. And that's been the policy of the Bank of Japan. And they've been actively defending low interest rates. So if the bond prices, if the bond rates start to go up, they just buy all the bonds to push them back down. So they want low interest rates to stimulate their economy, which creates their cheap currency. So then investors can go borrow money from Japan. They can short the Japanese currency. They can borrow money in yen at very low interest rates, 0% or 1%. Okay. And then they can go invest it over in Mexico, where interest rates in Mexico on Mexican government bonds are as high as 11% on like 1-year bonds. So why are, in Mexico, do their bonds pay 11% interest, while in Japan they pay 1% or 0%? Mexico has lots of young people, a faster economy focused on growth, higher interest rates because it's more of an emerging market instead of a developed market, and therefore a more expensive currency. So this chart here is the spread between 1-year bonds in Mexico and 1-year bonds in Japan. So this is currently at, as of Monday, at 1,090 basis points. Back here, that was like 1,200 basis points. That's 12%. So you can borrow money in yen, convert it to pesos, and invest it in Mexican bonds and earn 11% or 12%. So you can make a spread of up to 12%. And so that's pretty attractive, 12% a year, right? Except when things turn and people using leverage to make these bets. So that's the basics of the carry trade. You have low rates in a country like Japan, a really cheap currency. You can borrow money and hardly pay any interest. And you can take it over to a higher yielding currency like Mexico, where they're paying a lot higher interest, and earn like a 12% spread, right? So great. Why not? Well, when that trade gets too crowded and things start to unravel, that's when we get into trouble like what we experienced yesterday. And there is a lot of leverage in our economy today, not just between the yen and the peso. The yen and the US dollar is a big carry trade, right? We can look at a similar chart of spreads in between Japan and the United States. This is inverted. So, but you can still, you can earn like 4% by borrowing in yen, converting it to dollars, and investing in bonds. But what happens when the yen starts to go up? When the Bank of Japan starts to raise its interest rates, or when what's happening today is when the fear of recession enters into the United States and people start saying, my goodness, the Federal Reserve is going to have to cut interest rates. I mean, I heard people talking on Monday, I think it might have been Jeremy Siegel, asking the Fed to come in and make an emergency 75 basis point rate cut. Not going to happen. But when you get the rates coming down in the United States, that spread isn't as attractive anymore. We don't know if they're come down further. So people start to panic, race for the exits. I got to get out of this leveraged position that I'm in because it's not looking so great anymore. And if the Japanese yen is going to go up, every ticket goes up creates more pain for me because I'm short the yen. So there you have it. That's what a carry trade is. And what we're seeing is the unwinding of those carry trades. And what we saw yesterday in the markets is what happens when you have a leveraged trade that starts to unwind, right? All the correlations go to one. Everything was getting sold on Sunday night. Metals were down, cryptos were down, equities were down, energy was down, right? That's when all correlations go to one. And those are the moments, those are the panic moments in the market. So I hope that gives you a better understanding of what a carry trade is. These trades can be very stable and very attractive, and people can use a lot of leverage to get into them. And then when that sentiment shifts, everybody starts running for the exits, and that's when the panic kicks in. So, is the yen carry trade the only thing that's going on? Absolutely not, right? So we had the employment report come out on Friday that showed employment slowing in the United States, unemployment rising, joblessness claims rising. So it seems like the Fed has overshot and stayed too tight for too long. That's the fear that's setting in now. And it's a real fear. We also see the yield curve flattening. So this is another just little educational piece here. I think this stuff's important to understand, even if, you're just a pure trader, okay? We can still be technical traders, but we do have to understand the fundamental picture of what's happening. So here we have the yield curve. Sorry, let me go back. Yeah, okay, it's up on the screen now. Thanks, team. This is the current yield curve. And here is the 2-year interest rate. So let me make this a little smaller. Come on. What have I done here? Okay. Currently, the 2-year, below 4% now, and the 10-year, the 20-year up above 4%. So this is an uninverted yield curve from the 2-year to the 20-year. But, not too long ago, even a month ago, this was this is in the beginning of 2024, the 2-year was paying more than the 20-year. And back in the beginning of 2023, the 2-year was way above the 20-year. So we're starting to see that yield curve uninvert. And I think this will be the last technical chart that I will highlight today. But this is the 10-year minus the 2-year yield. And you can see when it comes below the 0 line here, right? When the 2-year is paying more interest than the 10-year, stays below for a while. And then when it uninverts, that's when we get these recessions, which are these gray bars here, okay? So we're not uninverted yet. This is the current focus, current data over here, right? So we're not quite there, but we're getting darn close of the 2-year being below the 10-year on rates. And we're definitely headed in that direction, right? So that puts in the fear of recession. And recession means lower interest rates in the United States, which undoes the carry trade. So they all kind of go together to create these panic moments when we have interest rates, sentiment shift, and these highly leveraged trades start to unwind. All right, so any questions about that? Not seeing them. Hello, everybody. Thanks again for saying hello and telling me where you're at. All right. So that's the background. Now let's look at what's going on with the Japanese yen itself from a cycles perspective. So we're starting here with weekly data. Again, big picture. Okay. And, we can see here, this is it's actually the US dollars divided by the Japanese yen. So when this is going up, it means the US dollar is getting more valuable and the Japanese yen is getting less valuable. And when it starts going down is when those who are short the yen are feeling the pain, right? And that's definitely what happened over the last 2 weeks, right? Well, let's see, this goes back to the end of June, actually, because this is weekly data. So it was the end of June, beginning of July, when we really started to see the yen go up and the dollar go down, and we started to get this correction. Now, this cycle here is a solid cycle, 219 periods, going back to 1997, and it's done a pretty good job. Okay. A little extended, but the cycle bottom doesn't bottom until March. So we could see, according to the weekly cycle, more yen going up, dollar going down, which makes that deleveraging more urgent, makes being levered short the yen more of a problem. So from a very long-term cycles perspective, look for more deleveraging ahead, more unwinding of these carry trades that have borrowed in yen to fund other investments. Now then, looking at the daily cycles. Best cycle in the dailies is this 130 period cycle. And it has bottomed, but it's also in free fall, right? So this is, one of those situations where you have to be very careful about trying to catch a falling knife. But, momentum hasn't turned up, and we have seen a bottom in a strong cycle. Let's grab this. I think this 59 over here is a pretty close harmonic of the 130. And we can see that both cycles are even bottoming together, right? So nearly there on the 59, there on the 130. So from a daily cycle perspective, it's hinting, not there yet, but hinting at some relief. The yen, going back down, the dollar going up. We'll take it. If we saw some relief, got a rally in assets that are being funded by this yen carry trade, right? Don't have a liquidity crisis. We could see a rise in the USD JPY, which would take the pressure off the carry trade unwind into September. All right, now here we are at 60 minutes on the USD JPY. I don't have 2-hour data. That's why I'm not doing the 2-hour cycle here. I'm showing the 60-minute data instead of the 2-hour data. And we can see a nice cycle here. The 171 in the hourly data. And it's bottomed and moving up for the next couple of days, peaking August 9th. So the rest of this week, basically. And we got a strong buy signal here with the CRSI coming well down below and coming back up in between the bands in a very steep manner. Yeah, we got a little bit of a pullback here, but we got a nice buy signal on a nice cycle on the hourly bars, which tells us that, this relief that we started to get yesterday morning is starting to, looks like it has more legs, okay? That we should see lower prices in the yen, higher USD JPY. And then finally, the last cycle here is at the 20-minute level. Really nice cycle here on the 20-minute data. You have to have the Analyst Pro to do this intraday analysis. And by the way, this is a new database that is underlying our Analyst Pro application. Not yet available to everybody. We're beta testing it, but it's making this intraday analysis a lot easier in our application and a lot more accessible to our Analyst Pro subscribers. So on the 20-minute cycle here, there's a really nice cycle, 174 periods, topping right now with a sell signal, crossing the momentum, crossing down through the upper band. So that would send the yen back up, maybe through today, tomorrow, right? So we could see a little more pressure on the carry trade. But if we go back to the hourly data, we should see overall over the course of this week, less pressure from the carry trade. Lastly, just want to jump over and show the sentiment. Again, these are the commercials, the smart money. They were very long, but they're starting to back off. Okay. And small trader sentiment is uber bullish, which means that should start to come down. It's easy to get inverted on these things. And I think this means, less pressure from the carry trade if we take the opposite of the small investor, the opposite position. So that's what I'm seeing in terms of the implications of the carry trade from the cycle perspective, right? Cycles aren't the only thing in the world, but this is really good information to have. We've got some good cycles on the hourly data, some good cycles on the shorter term data, the 20-minute data, and some good cycles here on the daily and the weekly. So overall, hopefully we got a better understanding now of how the carry trade works, right? What it is, why we're in this situation, right? And what are the likely short-term directions? Because I do think as traders right now, we have to be paying close attention to what's happening with the yen, because that's got the attention of the world right now. And we're worried about, is there more unwind to go? And, are we going to see panic price action? If this thing isn't unwound, is there some giant trader out there or institution, some long-term capital management who's got a huge position that they're feeling the pain of right now and they need to unwind? So the cycles, again, short-term telling us maybe today we'll see a little bit more of the carry trade pressure. But over the course of this week, the cycles suggest that should ease. And, over the course of this month, the cycles suggest that should ease. But longer term, by the end of the year, we're definitely likely to see this carry trade unwinding come up a lot. And moreover, it's a systemic problem in our economy, this over leveraging that's going on in the financial world right now. And there's a lot of unwinding to go. Ray Dalio talks about this in his big debt cycles. This is the reality that we're in right now. We're over indebted, especially in the developed world in the United States. And we've got to start to unwind all the leverage that has been built up from all the debt. So systemically, that's going to be a problem for years to come. All right. let me see what's on your mind. And William, can you provide the link to the Fred chart? Sure. Let me just show you where to get that real quick. Okay, so we'll go back over here. Just go to fred.stlouisfed.org. Okay. I just went here and I typed yield curve. There's different yield curves. Okay. There's not just one. There's many varieties of yield curve, but this is the 10-year minus the 2-year. There's also the 10-year minus the 3-month. That's interesting to look at too. The 10-year minus the 3-month is still well below the 0 line, right? We can look back in time and see when the 10-year minus the 3-month gets back above recession is here, almost very quickly. Okay. So we're not there yet, but we're heading in that direction. All right. Other questions? Sorry for looking over at my other screen. Let me go back here. Can you update us on your natural gas trade? So thanks for asking that. When I showed the natural gas trade, let's go take a look at that. All right, so natural gas here, 2 hours. And then let's also look at NG equals F from Yahoo Finance. Okay, oops. Look, when I mentioned this trade last time we talked, I said, be very careful with this trade. I think ultimately this is a little longer term play. The weekly is supporting. I'm not showing this as just the daily, but both the daily and the weekly strongly support upside in natural gas. We've got positive momentum divergence. I said I'm pretty excited about higher natural gas prices by the fall. I also said, keep your stop around $2, and we definitely broke through the $2 mark. Meanwhile, we're moving back up there today. If we look at the shorter term cycles, these are the 2-hour cycles. We got this 64 period cycle, I think was one of the main ones we were looking at. 105, 144. But on the shorter term, I still see very positive momentum divergence, even though the price is down here. Okay. But we know the trends in natural gas have been crushing the natural gas market, right? This is just the 2-hour data here, right? Down, 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 down. So meanwhile, natural gas is a market that literally, when it does take off, it explodes. We can look back a little further here in natural gas to remember what happened back in April, right? You got this move from $1.60 up to $2. What is that? 1632, like a 20% move almost overnight. So, and then you got this off to the races move here. So look, the natural gas market, it's a tricky market. It's the most random market that I've encountered in my life as a trader. So I think small asymmetric bets, there's still a favorable opportunity. I'm still long natural gas, but with a smaller position, my trading bet didn't work out. I got out of a substantial amount of that trade when we broke below $2, but I'm holding on a little bit for I think a possibly explosive move to the upside by the fall. All right, what else? So we covered the Fred chart. Look at BTC would be appreciated. Yep. Let's take a look. Start out at the daily. Got some really nice cycles in Bitcoin. I think Bitcoin, is a more psychological market than a more behaviorally driven market than most. Almost entirely behavioral. So the daily cycles on Bitcoin, I still think favor the upside. Momentum is a little shaky right now. But in general, the daily cycles still favor the upside. And if we go look at the shorter term cycles, like the 2-hour cycle in Bitcoin, also very nice cycle here, this 112. It's that kind of, 1 week up, 1 week down cycle. And we are at the bottom of that cycle. Not up through the bands yet, but obviously some positive momentum here out of the bottom of a cycle. So I'm willing to give that, the benefit of the doubt. But this has been a really interesting cycle. That the down week of this cycle certainly did its work, right? And now we're in the up week of this 2-hour cycle here for, the next week or so of trading. And if we go down to just the shorter term cycles on Bitcoin, like the 20 minutes, I think there's a pretty decent cycle in here too. Yeah, this 150 and this 260. This definitely, this suggests a little bit of headwinds for today, tomorrow. Again, though, cycles to me are like, which way is the wind blowing? Markets can go up into down cycles and down into up cycles. We definitely want to know about them. But we combine them with other indicators to use them most effectively. So that's what I'm seeing on Bitcoin. Thanks for the question, Florian. Let's see, what else? What cycles do you see regarding USD DXY? Do you think further sell-off might be possible? Good question. Gilbrex. I hope I pronounced that somewhat correctly. Let's take a look at the cycles in the dollar. I think we can do DXY equals F from Yahoo Finance at a daily level. While that's doing its thing, I'm going to jump over and open up the short-term cycle as well in the dollar. That's not it. All right, what is the dollar? Right, maybe it's USD equals X. No. I'll have to go over to Yahoo Finance and find the ticker. TX equals F. Okay. I don't know. I kind of like the 95 a little better here. The cycles are up, but we've been going down into the teeth of that cycle. We can look at some other cycles, you know, it's just 320. So I think the daily cycles on the dollar have been pointing up, but not working very well, right? And then if we look at the shorter term cycles, there are some strong cycles in the shorter term data. Let's add a few more bars here. And we got an 80 period, the 118. So that's, you know, that 118 is similar to that 112 in Bitcoin. See that a lot, this kind of 115 to 120 cycle. It's, again, it's a week plus maybe half a day. You know, I think this upside opportunity in the dollar in terms of the cycles on the short term for this week, that would kind of support the relief of the carry trade idea too. So good question, Flavian. I see the cycles indicating a little bit of upside for the dollar over the week ahead. All right. Got a few more minutes. Let's see. Mark Jackson, can you tell me how you're going to get rich without doing any work? Great question, Mark. I don't have the answer to that one. I think the idea of getting rich without doing any work is actually what gets us into a lot of trouble. So I don't think that's how it works. I think you're being sarcastic, but hopefully you are. Yeah, tongue in cheek. All right, Dan D, can you please try to grab some data from Fred directly? You know, why don't you write into our support for that one? Dan's more than I can tackle for today. All right, the S&P 500, we'll wrap up with looking at where we are. Let's see, dashboard. And this is daily data. So daily data is part of our basic membership. You get access to all this as part of being a member of the foundation. And on the S&P 500, the daily cycles, of course, there's this 80-day cycle, which everybody should know about. If you don't, this is cycles 101 right here, the 80-day cycle in US equities. It's 80 trading days, so that's pretty close to 4 months. And these cycles, you know, the 80 trading day cycle in the S&P 500 has been solidly down for, look at that. That was the top on July 16th, forecasted at the top the 1st of July. So we've got some right translation here, which usually we do in bull markets, meaning the peak of the cycle is a little later than the top. But the daily cycle on the S&P 500 definitely down. And if we go look at the futures, you can look at the 2-hour data on ES. I think, let's see here. Got this big cycle, 256. I like to add a little more data, especially for a long cycle like that. Yeah, it's a little longer, like 280, I think is more like it. The big one we've been following. There's a 90, which is it's about a third of 280. So you put those together and, you know, definitely got a cycle bottom going on here. If the dollar goes up and the yen carry trade abates, I think we could see a rally this week in equities, just even if it's just a relief rally. So that's what I'm seeing in equities. All right, friends, covered a lot of ground. Let me just get you back over here. Really appreciate everybody joining me today. Hope this has been useful. We're learning about cycles, shorter term cycles. Hoping over the next week or two to start to kind of put the whole picture together. We've identified maybe half a dozen markets and half a dozen shorter term cycles that we've been paying attention to. And working on my RiskSmith tools to begin to share with everybody how I kind of combine trades into a portfolio of trades get some risk-free trades, reduce my exposure. And this is definitely a time when we all need to be managing risk, right? So managing risk is what saved my bacon on Monday. And I'm very grateful for it. So I'm also grateful for your support of the Foundation for the Study of Cycles. Again, we are a not-for-profit. If you're not a member, we'd love to have you join us. Even if you just get on our email list, please do. Please become members. And if you're already a member, consider upgrading to our Pro package to get the intraday analysis and even making a donation if you found this free information to be valuable. Thanks so much. Hope to see you again next week. Bye-bye.